And welcome to the Bitcoin Fortress podcast, helping you increase your financial freedom. This is episode 160, recorded here on March 30th, 2025. We are at block height 890133, Moscow time 1213. Fees are 1, 1, and 2. This podcast is for entertainment only. It's not investing advice, so please do your own homework as usual. I have to say that. And we will get into the market news update outlook. We will run through the weekly top Bitcoin news. Check out this week's featured post on the Bitcoin Fortress Substack. Talk about the look ahead for upcoming articles. Got some cool stuff in the works. And we'll wrap it up. So, with that, let's jump right in with the market news. Wall Street on Friday closed out a roller coaster week that began with an advance and ended with a sell off. Tariffs remained at the top of the headlines as market participants geared up for April 2nd, a day that US President Donald Trump has dubbed Liberation Day. His reciprocal tariffs will go into effect that day, along with the 25% tariff on auto imports announced earlier this week. Also dampening market sentiment was a key inflation reading that came in a tad hotter than anticipated on Friday. The Fed's preferred inflation gauge, the core personal consumption expenditures price index, rose 0.4% month over month in February compared to a consensus of 0.3%. On an annual basis, the index ticked up 2.8% versus an estimate of 2.7%. Also grabbing some of the spotlight was CoreWeave's hotly anticipated market debut, but the event turned out to be a dud as the AI hyperscaler stock ended flat on its first day. The IPO had been significantly downsized going in. For the week, the S&P 500 retreated 1.5%, while the tech-heavy Nasdaq Composite slid 2.6%. The blue chip Dow fell 1%. And looking ahead, Wall Street's focus next week will be squarely on April 2nd, the so-called Liberation Day. Trump is expected to implement reciprocal tariffs along with the 25% tariff on automobile imports. Turmoil caused by his trade war escalation has roiled markets, and stocks could be in for more turbulence depending upon the details of the April 2nd developments. It will also be a busy week in terms of economic data, especially for the labor market. Investors will receive an update on February job openings along with March private employment. It will culminate with Friday's highly anticipated non-farm payrolls report. So, a wild week in the markets. Moving ahead, No BS Bitcoin had posted for a while. So they did publish something last week, of course, right after I published the show. But it was lots of news in there, so I thought I would run through that at the risk of repeating some stuff that I went over last week. So let's dive right in. Key dates have been set for the Samurai Wallet developers criminal trial. Industry journalists from Bitcoin Magazine and The Rage attended the fourth pretrial hearing in the United States case against the developers of Samurai Wallet. During the hearing, the prosecution and defense agreed on the following pretrial motion schedule and there's a list of dates here. I'm not going to read that. After the hearing, the developers expressed gratitude to those who donated to the Peer-to-Peer Rights Fund, which supports their legal defense. And as always, there'll be a link to this in the show notes if you want to dig deeper into any of these articles that you find interesting. OpenSats has announced 10th wave of Bitcoin grants. The projects included in this wave are Bitcoin Safe, Stable Channels, Way, Floresta, Crux, and Crux Installer. Additionally, OpenSats announced support for 6 nonprofit organizations seeking to advance open source Bitcoin development, including 2140, OpenCash, BitShala, Summer of Bitcoin, Bitcoin Dev Launchpad, and the Foundation Formation Kit. The recipients of the B Trust grants for Q1 2025 have been announced. Brandon Odewar and Itoro Ukpong received the B-Trust Starter Grant, which allows them to work full-time on open source Bitcoin projects and enhance their contributions to the ecosystem. Love to see it. The U.S. House passed resolution to kill the IRS's DeFi broker rule. The U.S. House of Representatives voted to nullify a rule requiring decentralized finance protocols to report customer trade information to the IRS. The resolution must pass a Senate vote before being presented to President Donald Trump, who has indicated his support. The US SEC has issued a statement on proof of work mining activities. The agency clarified that proof of work mining activities are not considered the offer and sale of securities under the Securities Act of 1933 and the Exchange Act of 1934. So we continue to see regulation rolling back. Tether is now the seventh largest holder of US Treasuries. Tether, the issuer of USDT, the world's largest stablecoin, has become the seventh largest buyer of U.S. Treasury securities, surpassing countries like Canada, Taiwan, Mexico, Norway, and Hong Kong. According to a March 20th post on X by Paolo Arduino, CEO of Tether. They have a little chart here that shows, let's see. The number one buyer of treasuries was Cayman Islands, followed by France, Luxembourg, Belgium, Singapore, and the United Kingdom. Hmm. The United States officially established a Bitcoin reserve. US President Donald Trump has signed an executive order to create a strategic Bitcoin reserve and a separate digital asset stockpile. We already heard about that. U.S. Senator Cynthia Lummis has reintroduced the Bitcoin Act. If passed, the bill would enable the U.S. government to acquire over 1 million Bitcoin, funded by Federal Reserve net earnings and adjustments to Treasury certificates based on gold holdings. Russian exchange Garantex seized by U.S. law enforcement operations. The U.S. Secret Service, in collaboration with international law enforcement agencies, dismantled and seized the website of Garantex, a Russian cryptocurrency exchange linked to darknet markets and ransomware hackers. Indian authorities arrested Alexei Beskyakov, co-founder and administrator of the platform, while he was vacationing in Varkala, India, with his family. Hmm. The U.S. Treasury has blacklisted 49 Bitcoin and Monero addresses linked to the Nemesis darknet marketplace. The U.S. Department of the Treasury sanctioned Belarus Parsarad, an Iranian national accused of managing the now defunct Nemesis darknet marketplace. Authorities blacklisted 49 Bitcoin and Monero addresses linked to him as part of an international operation that dismantled Nemesis in early 2024 per the Office of Foreign Assets Control. U.S. Senate Republicans moved to effectively legalize debanking. They aim to repeal a rule from December issued by the Consumer Financial Protection Bureau, which would allow payment apps like Venmo and PayPal to resume ideological debanking. The repeal will now be voted on by the House. North Korea now holds 13,441 Bitcoin, as we discussed last week. According to chain surveillance firm Arkham Intelligence, the company has become one of the top nation-state holders of Bitcoin following the recent $1.4 billion Bybit hack. During this incident, the Lazarus Group exchanged a significant portion of the stolen Ether for Bitcoin. Yes, anybody can use Bitcoin, friends and enemies alike. Russia is reportedly, speaking of that, Russia is reportedly using Bitcoin and USDT in oil trade. According to Reuters, some Russian oil companies are using Bitcoin, Ether, and stablecoins like Tether to facilitate the conversion of Chinese yuan and Indian rupees into Russian rubles. This practice, according to unnamed sources, represents a small but increasing portion of Russia's overall oil trade. Belarus is looking to mine Bitcoin. During a government meeting on March 4th, Belarusian President Alexander Lukashenko directed the new Minister of Energy, Alexei Kushnarenko, to develop the Bitcoin mining industry in the country. Pakistan plans to legalize Bitcoin. After years of restrictions, the country plans to legalize Bitcoin and altcoins by establishing a regulatory framework to attract foreign investment and promote adoption. Proposal to reduce the capital gains tax on digital assets from 55%, ouch, to 20% in Japan. Japanese lawmakers aim to reclassify cryptocurrencies as a distinct asset class and propose a new law to tax cryptocurrency derivatives trading similarly to spot investments. Taxes on crypto to crypto swaps would be deferred until they're converted to fiat currency. A bill to regulate Bitcoin salary payments has been introduced in Brazil. On March 14th, politician Luiz Felipe of Orleans Braganza submitted a proposal to the Brazilian National Congress to modify the salary payment system. The bill permits workers to receive up to 50% of their wages in Bitcoin and other cryptocurrencies, with the remainder paid in Brazilian reals. Argentina's Senate held its first ever conference on Bitcoin regulation. Organized by NGO Bitcoin Argentina, the event brought together key political advisors and department heads from multiple political blocs to discuss the potential impact of Bitcoin on the country's economy and regulatory environment. Despite an IMF deal, El Salvador continues to purchase Bitcoin. The IMF released a document outlining conditions for its extended fund facility with El Salvador, stating that future commitments would restrict government involvement in Bitcoin related activities and transactions. Nonetheless, El Salvador's strategic reserve is growing, with the country currently holding more than 6,124 Bitcoin. The National Library of El Salvador will operate a full Bitcoin node managed by Salvadorian Bitcoin educator Pupusas G. Gotta love that name. Additionally, the library's Bitcoin section will offer a regular lecture series featuring leading authors and builders in the Bitcoin space. The Libertarian Party of Australia has unveiled its Bitcoin policy white paper, which outlines a strategy for incorporating Bitcoin into the country's financial and regulatory frameworks. In Tennessee, the Bitcoin blockchain was used to verify local Republican elections. Simple Proof, a company that protects public documents via Bitcoin's distributed ledger, permanently recorded the voting results in block 886370 using their immutable proof service and the open timestamps protocol. Very, very cool. Bitcoin Strategic Reserve in Texas. The Texas Senate has approved SB 21, a bill introduced by Senator Charles Schwartner to establish a state Bitcoin Strategic Reserve, or BSR. The bill will now be voted on by the Texas House of Representatives. Additionally, a new BSR bill, HB 4258, has been proposed to allocate up to $250 million dollars from the Economic Stabilization Fund into Bitcoin and other digital assets. The U.S. Office of the Comptroller of the Currency, or OCC, has authorized financial institutions to provide crypto custody and stablecoin services. National banks and federal savings associations no longer need prior approval to offer custody services for Bitcoin, digital assets, and stablecoins. We'll talk a little bit more about that later. That's uh, going to, I think, really open up the competition for Bitcoin loans and other types of financial services. So stay tuned to that. The European Central Bank plans to complete its digital euro preparations by October. ECB President Christine Lagarde confirmed the launch of the central bank digital currency later this year, ensuring it will coexist with cash and offer privacy protections. Oh, I'll bet it will. In contrast to the United States, the European Central Bank has not announced any plans or approvals for Bitcoin related reserves. ECB officials continue to caution that America's adoption of Bitcoin and non-bank finance could jeopardize Europe's monetary sovereignty or potentially trigger the next financial crisis. At the same time, European citizens have shown little interest in adopting a central bank issued digital currency. Well, that's no surprise. Everywhere else they've tried to launch it, it's just people just don't like it. Policymakers in UK, Canada, and South Korea and Switzerland are not interested in holding Bitcoin reserves. The UK Treasury has no plans to establish a strategic Bitcoin reserve, citing the currency's volatility as unsuitable for the country. Canada's new Prime Minister designate and former central banker Mark Carney is a known skeptic of Bitcoin. The Bank of Korea stated it is not considering incorporating Bitcoin into its foreign exchange reserve. The vice president of the Swiss central bank has ruled out the possibility of including Bitcoin in its reserves. And all I can say to them is everyone gets Bitcoin at the price they deserve, and they deserve to pay more. Bills to end the Fed reintroduced in the United States. Representative Thomas Massie reintroduced this legislation in the House, shortly followed by a similar bill in the Senate introduced by Senator Mike Lee. ETF, End the Fed. U.S. Treasury expands financial surveillance at the southwest border. The Department of the Treasury's Financial Crimes Enforcement Network, or FinCEN, has reduced the currency transaction report threshold from $10,000 to $200 for residents of 30 zip codes in California and Texas. This move aims to combat illicit activities and money laundering by Mexico-based cartels and other criminal actors. Wow, the Eye of Sauron. The U.S. Treasury Department announced the suspension of the enforcement of the Corporate Transparency Act. As a result, domestic companies and their owners are not currently required to comply with the law, which would have mandated that approximately 32.5 million U.S. small business owners register with FinCEN. This is a victory for common sense, said U.S. Secretary of the Treasury Scott Bessent. India grants tax officials sweeping digital access powers. Starting in April 2026, India's Income Tax Department will gain extensive digital access rights under a new income tax bill. This will allow tax officials to access citizens' social media accounts, emails, and other digital platforms, significantly expanding their search and seizure powers. Not good. U.S. government scrubs encryption advice from government websites. According to Alec Muffet, the UK's National Cybersecurity Centre is no longer recommending high-risk individuals use encryption to protect sensitive information following a legal challenge to Apple's iCloud encryption. Guess they don't like it anymore. Meanwhile, Apple has sued the British government over a demand to create a backdoor. The Investigatory Powers Tribunal will evaluate the legality of the UK's notice to Apple and may order it to be overturned if deemed unlawful. Craig Wright ordered to pay $290,000 in legal costs over improper AI usage. A UK judge ordered Craig Wright, who most definitely did not invent Bitcoin, to pay £225,000 or $290,000 toward the Crypto Open Patent Alliance's legal costs after finding that Wright improperly used AI to file his appeal, which risked significantly misleading the court. Mozilla rewrites Firefox's terms of use after user backlash. The maker of Firefox browser revised its policy to clarify issues with previously broad language that suggested it was acquiring rights to user data for potential sale to advertisers or AI companies. The company clarified that this was not the case and stated that the new terms do not change how the company uses data generated by its users. Telegram's Pavel Durov allowed to leave France. Durov was barred from leaving France, but the Paris prosecutor's office announced that the investigative judges have lifted his travel restrictions from March 15th to April 7th, after which he must return to France. The EFF opposes the U.S. Stop CSAM Act. The Electronic Frontier Foundation has sent a letter to the Senate Judiciary Committee opposing the Strengthening Transparency and Obligation to Protect Children Suffering from Abuse and Mistreatment Act. At its core, Stop CSAM endangers encrypted messages, jeopardizing the privacy, security, and free speech of every American and fundamentally altering our online communications. In the digital world, end-to-end encryption is our best chance to maintain both individual and national security, said the organization. So we're still fighting that battle. LND's deadline aware budget sweeper. Starting with version 0.18.0, LND includes a rewritten sweeper subsystem for transaction batching and fee bumping. It uses HTLC deadlines and fee budgets to create a fee rate curve, dynamically adjusting fees for urgent transactions. This strategy enhances security and is recommended for adoption by other Lightning implementations, writes Matt Morehouse. Let's see here. A lot of this stuff is software updates. Ah, here we go. Strategies acquired 130 Bitcoin, bringing its total holdings to 499,226 coins. Michael Saylor's company made a $10.7 million Bitcoin purchase after announcing plans to issue up to $21 billion in preferred stock to acquire more Bitcoin. Rumble has purchased 188 Bitcoin for its treasury. The video sharing platform and cloud services provider announced a $17.1 million Bitcoin purchase at approximately $91,000 per coin. The move aligns with its previously announced strategy to allocate up to $20 million to Bitcoin. Metaplanet has acquired an additional 150 Bitcoin, bringing its total holdings to 3,200 Bitcoin, valued at approximately 266.2 million. Additionally, the company has appointed Eric Trump, the second son of the U.S. president, to its strategic board of advisors. Brazilian fintech Melius has allocated 10% of its cash reserves into Bitcoin, investing $4.1 million to acquire 45.72 coins at an average price of 90,926 per Bitcoin. Starkware has established a Bitcoin reserve. The organization hasn't disclosed specifics about its Bitcoin holdings or acquisition goals, but admitted that Bitcoin remains central to its operating strategy. We put our money where our mouths are. I believe every blockchain company should and will hold Bitcoin, and we who are working on Bitcoin day in and day out should lead by example, says Starkware CEO and co-founder Eli Ben Sasson. Fold has added 475 Bitcoin to its Bitcoin reserve through a convertible note offering. The firm's total holdings now exceed 1,485 coins. Sapo Bank has launched Bitcoin-backed loans. The company introduced US dollar loans backed by Bitcoin, offering long-term holders liquidity without requiring them to sell their Bitcoin. Blockstream has secured a multi-billion dollar investment for its Bitcoin funds. As reported by Bloomberg, the company will launch 3 funds on April 1st, with external investors able to join starting July 1st. The Blockstream Income Fund offers 100,000 to $5 million loans in US dollars using Bitcoin as collateral. The Blockstream Alpha Fund is portfolio growth via Lightning Network infrastructure, and the Blockstream Yield Fund lending Bitcoin with US dollar deposits as collateral. Bitwise debuts an ETF tracking companies holding Bitcoin. The Bitcoin Standard Corporation's ETF comprises stocks of companies that have over 1,000 Bitcoin in their treasury. Hmm, that's an interesting one. Cantor Fitzgerald has chosen Anchorage Digital and Copper.co for crypto custody services. Anchorage Digital CEO Nathan McCauley stated that this partnership represents a significant advancement for the Bitcoin financing ecosystem, emphasizing the importance of safety and security through federally regulated digital asset custody. Deutsche Börse to launch crypto custody services via Clearstream. Clearstream, a subsidiary of Deutsche Börse, the third largest stock exchange in Europe, plans to introduce crypto custody services specifically for institutional clients. Coinbase to launch 24/7 Bitcoin and Ethereum futures for US traders. The platform is set to introduce 24/7 trading for Bitcoin and Ethereum futures in its CFTC regulated Coinbase derivatives exchange in the coming weeks. Demand Pool has opened applications for its Stratum V2 mining pool. Miners can apply to become launch partners, with successful applicants benefiting from a 0% fee for the first 2 months and a special 2-year founding miner agreement. Applications are open until March 28th. 2025. Oh well, that's past now. Bitdeer has launched new models for its Seal Miner A2 product line. The firm announced that the A2 Pro device is compatible with both hydrocooling and air cooling, achieving a power efficiency of 14.9 joules per terahash in each mode. Additionally, Bitdeer has successfully tested its Seal O3 Bitcoin mining ASIC chip, which is reported to have achieved a power efficiency of 9.7 joules per terahash. Kango to become Bitcoin mining proxy for Bitmain. Kango, a Chinese automobile financing platform that recently shifted to Bitcoin mining, is poised to become an indirect hashing proxy for Bitmain through its financing arm, Antalpha, reports the Miner Mag. Brains has obtained its Bitcoin mining test chip after 2.5 years of development. The test chip underscores a rising interest in creating independent Bitcoin mining ASICs and reduce reliance on Bitmain. Moreover, Brains has committed to open source their BCB 100 control board, along with its supporting software and additional features. The BCB 100 is designed to replace standard Antminer control boards. Brains Pool surpassed 1,000 daily Lightning payments with Voltage. The milestone highlights the growing Lightning Network's impact on Bitcoin mining by enabling miners to perform instant, cost-effective transactions, thereby lessening dependence on slow and costly on-chain payments. Canaan has secured up to $200 million through a Series A1 preferred shares financing. It will be used to support Canaan's research and development, production expansion, and investments in digital mining infrastructure in North America. A solo Bitcoin miner has successfully mined block 887212, reportedly using a BitAxe machine with a performance of 480 gigahashes per second. I'm running two, so I'm waiting for my turn. Better odds than the lottery, at least. Stats and Facts Hackathon winners. The competition awarded first place to Tollgate for its innovative approach to internet access through pay-as-you-go Wi-Fi powered by Bitcoin without requiring signups or subscriptions, thus enabling borderless connectivity. Second place went to Bitcoin Safe for its focus on enhancing security and usability in self-custody solutions with outstanding UI UX. Third place was awarded to LNW Cash, which explores local advancements in Bitcoin and eCash privacy and accessibility. The MIT Bitcoin Hackathon 2025 will be on April 4th through 6th. Participants can attend both in person and online. You can learn more about it here, and there's a link. The Cheat Code Conference will occur on April 11th through 13th, 2025 in Bedford, England. The event is organized by entrepreneur and journalist Peter McCormick. Lab Startup School Summer Edition is an intensive hybrid program intended to assist early stage startups in validating their ideas, building traction, and preparing for fundraising. And you can apply here. There's a link in the article. Bitcoin Plus Plus Scaling Edition is planned to be held in Istanbul, Turkey in September 2025. You can get your conference tickets here, and there's a link. Africa Bitcoin Conference 2025. The event is set to take place on December 3rd through 5th in Port Louis, Mauritius. Get your tickets with a 30% discount here, and there's a link. And that about wraps it up. Jumping ahead to the Hodler's Digest for the week from Cointelegraph. Let's see what we got going on here. Bitcoin will break past its $109,000 all-time high sooner than expected, despite recent volatile U.S. macroeconomic conditions, according to a crypto analyst. The market may be underestimating how quickly Bitcoin could surge, potentially hitting new all-time highs before Q2 is out. Real Vision chief crypto analyst Jamie Coots told Cointelegraph. He said this forecast stands regardless of whether or not there is more clarity on U.S. President Donald Trump's tariffs and potential recession concerns. U.S. President Donald Trump reportedly issued pardons to three co-founders of the cryptocurrency exchange BitMEX, who had pleaded guilty to felony charges. According to a March 28th CNBC report, Trump granted Trump granted pardons to Arthur Hayes, Benjamin Dello, and Samuel Reed, who were facing a range of criminal charges related to money laundering or violations of the infamous Bank Secrecy Act. Hayes and Dello pleaded guilty in February 2022, admitting they willfully failed to establish, implement, and maintain an anti money laundering program at BitMEX, while Reed entered a plea a few weeks later. Officials with the Federal Bureau of Prisons have moved former FTX CEO Sam Bankman-Fried to a transit facility days after political commentator Tucker Carlson interviewed him. As of March 27th, the Bureau's website showed Bankman-Fried was being housed at the Federal Transfer Center in Oklahoma City, suggesting he may be moved from the facility where he was incarcerated while awaiting trial, and then moving forward with an appeal of his conviction. Carlson remotely interviewed Bankman-Fried, commonly known as SBF, from the Metropolitan Detention Center in Brooklyn, New York, on March 5th, a reportedly unsanctioned event that resulted in the former FTX CEO being sent to solitary confinement. The United Arab Emirates expects its digital dirham central bank digital currency to roll out in the fourth quarter of 2025, according to a report in the Khalij Times. Central Bank of the UAE Governor Khaled Mohammed Balama said that the blockchain-based currency could improve financial stability and help combat financial crime. According to the report, the retail sector could expect the issuance of a digital dirham in the last quarter of 2025. It will further enable the development of innovative digital products, services, and new business models while reducing costs and increasing access to international markets, Balama said. Hmm. Well, we'll see what the market says about that. Crypto.com is facing criticism from the crypto community after reissuing 70 billion Kronos tokens burned in 2021. Critics said the move undermines the principles of decentralization and transparency in the cryptocurrency space. The controversy erupted on March 25th after pseudonymous on-chain investigator Zach XBT posted on X accusing Crypto.com of reissuing Kronos tokens that had been declared permanently removed from circulation. CRO is no different from a scam, Zach XBT said, claiming the reissued amount represented 70% of the total supply and contradicted the community's expectations. Your team just reissued 70 billion CRO a week ago that was previously burned forever in 2021 and went against the community wishes as you control majority of the supply, he added. And shitcoins. That's what you get when you shitcoin. Let's see. What else do we have here? XRP, don't care. North Korea affiliated hackers may have scaled back their operations in the second half of 2024 while preparing for what became the largest crypto hack in history. The crypto industry was rocked by the enormous hack on February 21st when Bybit lost over $1.4 billion to the infamous North Korean Lazarus Group, which seems to have prepared the attack months in advance. According to blockchain analytics firm Chainalysis, illicit activity tied to North Korean cyber actors sharply declined after July 1st, 2024, despite a surge in attacks earlier that year. The slowdown in crypto hacks by North Korean agents had raised significant red flags, according to Eric Jardine, Chainalysis cybercrimes research lead. Dark web threat actors claim to have hundreds of thousands of user records, including names, passwords, and location data of Gemini and Binance users, putting the apparent lists up for sale on the internet. The Dark Web Informer, a dark web cyber news site, said in a March 27th blog post that the latest sale is from a threat actor operating under the handle AKM69, who purportedly has an extensive list of private user information from users of crypto exchange Gemini. The database for sale reportedly includes 100,000 records, each containing full names, emails, phone numbers, and location data of individuals from the United States and a few entries from Singapore and the UK, the Dark Web Informer said. And that wraps up Hodler's Digest. Moving ahead, this is from Decrypt, the week in Bitcoin. Let's see what's happening here that's new and exciting. Bitcoin swung up and down as usual over the last week, and while things were looking up midweek, familiar inflation fears helped sink the price by the time Friday rolled around. The coin's price was recently at $82,480 per coin, according to CoinGecko, after hitting nearly 3 week high of 88,474 on Monday. As of this writing, Bitcoin is now down by almost 2% on the week. Bitcoin's dip came after the U.S. Commerce Department reported Friday that the core personal consumption expenditures index, or PCE, was up 0.4% in February, its largest monthly increase in over a year. Yeah, it looks like we've been bouncing between 80 and 95 since early March. Traders are still hesitant with risk assets like Bitcoin and stocks, which also dropped Friday as persistent inflation and President Trump's trade war continue to unsettle the markets. Still, it was an interesting week for Bitcoin. American Bitcoin ETFs took in new investor cash each day from Monday through Thursday, Farside Investors data shows, but it finally showed red on Friday amid the broader market shock. Even so, the week's total inflows ended up in the green, at approximately $196.4 million. It may not sound like much, but after massive outflows last month, it looks like crypto investors are seeing Bitcoin's current price, 24% below its January all-time high, as a buying opportunity. Video game retailer and popular meme stock GameStop updated its investment policy on Tuesday to inform investors that it would add certain cryptocurrencies, including Bitcoin, to its balance sheet. The firm then said Wednesday that it would follow in the footsteps of Strategy, formerly MicroStrategy, and raise money from investors in the form of debt to buy the asset. GameStop aims to raise $1.3 billion to aid in its Bitcoin acquisition goal. GameStop first made headlines in 2021 when amateur traders started buying its moribund stock and pumping its price, leading to the meme stock phenomenon. It's now trying to strengthen its books by buying digital gold, but while the price of GME stock rose on the initial news this week, it's since plunged following word of the raise, as GameStop investors don't seem too keen on raising money for the ploy. Bitcoiners arrived in Fort Lauderdale this week for the world's biggest mining conference, Mining Disrupt. Engineers from the top manufacturing companies and vendors pushed a narrative that miners should be dipping their toes into the world of AI data centers to raise their game as Bitcoin's price dips and difficulty continues to climb. Decrypt was there to see if it really was as simple as that, and also learned that small businesses are tempted to start the trade in their backyard, but not by mining Bitcoin. Doge ASICs are still hot, apparently. The world's richest country may be keen on stacking SaaS via strategic reserve, but will the move inspire other nation states? In short, it looks like it. Brazil, the biggest economy in the Americas and biggest in Latin America, might be doing so soon. Pedro Giocondo Guerra, a bigwig in leftist President Inácio Lula da Silva's administration, said that buying and holding Bitcoin would be in the country's public interest. Guerra, who is chief of staff to Vice President Geraldo Alckmin, made the comment at a congressional ceremony. Brazil has a huge crypto market, the biggest in South America, and the Brazilian real was the worst performing major currency last year. Politicians could be seeing an opportunity. Here's a fun one to end the week. An obviously doctored video of President Trump started making the rounds on Facebook and crypto Twitter, showing him cracking out the Bitcoin white paper in the Oval Office. Of course, it wasn't real, but it riled up some Bitcoin supporters. And while Trump has recently embraced Bitcoin and cryptocurrency, he's hardly a longtime aficionado, having previously been a skeptic who called it a scam and said he was not a fan of Bitcoin. Ah, yes, the politicians will always change their tune if it means getting elected. All right, next up, this is from Bitcoin.com news. This article was posted yesterday. A little bit deeper dive into this regulation with the banks on crypto. 5,000 US banks cleared for crypto. Regulators unlock digital assets. The U.S. Federal Deposit Insurance Corporation issued a pivotal policy update Friday, in Washington, allowing financial institutions under its jurisdiction to engage in crypto-related endeavors without needing to obtain prior approval. This adjustment mirrors a similar shift made earlier in the month by the Office of the Comptroller of the Currency, which also oversees parts of the U.S. banking sector. Through Financial Institution Letter FIL 7 2025, the FDIC clarified that banks under its supervision may engage in permissible crypto and digital asset services as long as they implement appropriate risk controls. The agency explained the guidance affirms that FDIC supervised institutions may engage in permissible activities, including activities involving new and emerging technologies such as crypto assets and digital assets, provided that they adequately manage the associated risks. By withdrawing its prior 2022 guidance, the agency marked a departure from more conservative oversight methods and aligned more closely with a forward-facing stance on technological integration. According to its website, the FDIC directly supervises and examines more than 5,000 banks and savings associations for operational safety and soundness. With today's action, the FDIC is turning the page on the flawed approach of the past 3 years, acting chairman Travis Hill opined. Also adding, I expect this to be one of the several steps the FDIC will take to lay out a new approach for how banks can engage in crypto and blockchain related activities in accordance with safety and soundness standards. Coordination with the President's Working Group on Digital Asset Markets remains ongoing as the FDIC develops additional instructions and collaborates with peer agencies. These efforts aim to harmonize standards and create a unified regulatory landscape for crypto activities across the banking system. Earlier this month, the OCC updated its position through Interpretive Letter 1183, establishing a formal pathway for federally chartered banks and savings associations to participate in specific cryptocurrency functions. These include offering custodial services, managing stablecoin operations, and engaging with distributed ledger systems. According to figures published by the OCC, more than 1,000 institutions fell under its supervision in 2024. So here comes the banksters. Next up from CoinDesk, this article was published on March 28th. Strategy holders might be at risk from Michael Saylor's financial wizardry. Is strategy in trouble? Led by Executive Chairman Michael Saylor, the firm, formerly known as MicroStrategy, has vacuumed up 506,137 Bitcoin, currently worth roughly $44 billion at Bitcoin's current price near $87,000 in the span of about 5 years. To the casual observer, the company seems to have a magic, unlimited pool of funds from which to draw on to buy more Bitcoin, but Strategy acquired a sizable chunk of its stash by issuing billions of dollars in equity and convertible notes, debt securities which can be converted into equity under special conditions, and more recently via the issuance of preferred stock, a type of equity that provides dividends to investors. However, the price of Bitcoin has been pushed down about 20% since peaking above $109,000 2 months ago. And though such swings in prices are far from unusual, the particularly aggressive recent purchases by Saylor and team mean Strategy's average acquisition price has risen to $66,000. The company is really only one more moderate swing down in price from being in the red on its buys, which begs the question, could all of Strategy's financial wizardry end up backfiring on the company should Bitcoin keep heading lower? It's highly unlikely that it results in a scenario where Strategy has to liquidate a bunch of Bitcoin because it gets margin called, Quinn Thompson, founder of crypto hedge fund Lecker Capital, told CoinDesk in an interview. For the most part, the debt is very likely to be able to be refinanced for the convertible notes, and then the firm started issuing this perpetual preferred stock, which never has to be repaid. In other words, not only is there very little chance that Strategy could suffer the kind of blow up that shook over crypto firms and projects in 22, like Genesis or Three Arrows Capital, but the firm has even refrained from posting its Bitcoin holdings as collateral for loans, with the exception of a loan taken from Silvergate, which was repaid in 2023. Even so, that does not necessarily mean that it's blue skies ahead for MicroStrategy investors, because under various scenarios, Saylor could be forced to issue more equity than the market can handle in order to maintain course. If he's not paying dividends with Strategy's cash flow, he's going to issue more shares and wreck the stock price, but it's no different than what he's doing already. Every time the retail bids it up, he wrecks the stock price by issuing more shares. In the future, he will have to do that, and the flows might not go into Bitcoin. They might go to repay these debtors, and it will hurt the share price, Thompson said. Strategy currently employs three different methods for raising capital. It can issue equity, convertible notes, or preferred stock. Issuing equity means that Strategy creates new MicroStrategy shares, sells them on the market, and uses the proceeds to buy Bitcoin. Naturally, that creates selling pressure on MicroStrategy and can potentially push the stock downward. Convertible notes have allowed Strategy to raise funds quickly without diluting MicroStrategy stock. Typically, investors like these notes because they offer a solid yield. They benefit if the stock surges, and they can usually be redeemed in cash for an amount equal to the original investment, in addition to interest payments. The tremendous volatility of Strategy's convertible notes, however, has allowed the company to mostly issue them at a 0% interest rate and still meet high demand from sophisticated market participants who have made bank trading that volatility. Finally, Strategy has begun deploying preferred stocks. These are instruments that tend to appeal to investors seeking lower volatility and more predictable returns through dividends. There are currently two offerings, STRK, which gives an 8% annual return, and STRF, which pays 10% annualized. But why is Strategy issuing all these different types of investment vehicles? The idea is to create demand for Strategy for all kinds of investors that may have different tolerances to risk. Jeffrey Park, head of alpha strategies at crypto asset management Bitwise, told CoinDesk in an interview. The convertible bond investors and the common equity investors were generally aligned in that they were both volatility seeking structures. Park said, preferred equities are different. They are favored by investors who want to minimize volatility at all costs for a steady, reliable, and high coupon that they feel is worth the credit risk. Strategy's capital structure is almost like a seesaw in a playground, Park added. The common shareholders and converts are on one side, the preferred equity holders are on the other. As sentiment shifts, the weights move around and it tilts the value between these securities. But no matter how the seesaw moves, its total weight, which is Strategy's enterprise value, remains the same. It's just a redistribution of people's perceived value across the liabilities that exist on the company's balance sheet. Even so, Strategy now finds itself in a situation where it must pay 8% dividends on STRK, 10% dividends on STRF, and a blend of 0.4% interest rate on its convertible bonds. With Strategy's software business providing very little cash flow, finding the funds to pay for all these dividends might be tricky. The company will likely need to keep issuing MicroStrategy stock to pay the interest it owes, Thompson said. It will hurt the share price. In the most extreme scenario, the stock could trade at a discount from its Bitcoin holdings because he would be having to issue shares to pay interest and cover cash flow. The really draconian scenario would be for the discount to get so wide, like 20 or 30%, like Grayscale's GBTC prior to its conversion to an ETF, that the shareholders riot and tell him to buy back shares and close the discount. Thompson added, right now, he's adding shareholder value by selling the stock at an elevated price and buying Bitcoin. But in the future, the reverse might be true, where the best way to add shareholder value would be to sell the Bitcoin and buy the stock, but that's quite far away. Saylor lost controlling voting power over the company in 2024 due to the continuous issuance of MicroStrategy stock, meaning that the scenario above could theoretically happen, especially if activist investors decided to get involved. Another potential risk for MicroStrategy holders is that the 2x long strategy exchange traded funds issued by T-Rex and Defiance, MSTX and MSTU, have seen weirdly persistent demand despite the stock's drawdown. Every time investors want to gain or increase their exposure to these ETFs, the issuers have to buy twice as many MicroStrategy shares. The popularity of these ETFs has helped create constant buying pressure for MicroStrategy. So far, they've accumulated over $3 billion in MicroStrategy exposure. The problem is that the music might stop someday, and if these ETFs begin to sell off their MicroStrategy shares, the reaction on the stock price could be violent. I don't know where the endless capital comes from to buy the dip. These ETFs have gotten obliterated. They're down huge, Thompson said. I mean, this is not a structural move up in the demand curve that you could count on. It's not something you should really bake into your 10-year predictions of Bitcoin price, but as long as it's existing, it's important for Bitcoin. So I'm continually amazed by it. Next up, from Bitcoin Magazine. This article is by Zach Herbert, and this was posted on March 27th. Uh, Hardware wallets, Bitcoin's biggest adoption barrier. So I thought this would be interesting to take a look at. There are roughly 500 million crypto users around the world, and at the most generous estimate, only 2.5% are using hardware wallets. That's a tiny number, but I'm relieved it's not higher. Why? Because I want people to onboard to Bitcoin by the billion, and I want to see everyone self-custody securely. The consumer hardware wallet industry is one of the biggest obstacles to achieving this goal. And it's not just not just to Bitcoin adoption. The whole decentralization revolution is at risk if we don't address the fatal flaw at the heart of the world's most popular wallets. Last year in these pages, Lucien Bourdon celebrated 10 years of the wallet revolution. There's a lot I agree with, but one glaring omission. Almost without exception, the leading consumer hardware wallets on the market today have barely innovated in a decade. And as every security expert knows, if you're not constantly advancing, you're moving backwards. The problem isn't simply that new threats are constantly emerging, it's that Bitcoin use cases are rapidly evolving. Bitcoin and other cryptocurrencies are no longer just stores of value, they're now a medium for all kinds of increasingly complex transactions. Yet hardware wallets' underlying technology is essentially unchanged from the days when their primary utility was as a secure offline key safe. It's the same with UX, with users still expected to write down their seed words and then squint at a tiny screen every time they want to approve a transaction. This isn't just a Bitcoin problem. The future of security will see everyone safeguarding our most valuable digital assets and sensitive data with cryptographic keys. In fact, the whole decentralized economy depends on what's inside these wallets. So let's take a peek. Lucian was right to stress that Bitcoin's strength comes from its commitment to open source principles. Where I profoundly disagree with him is that open source has been adopted by most of the wallet industry. The fact is, the leading hardware wallets continue to be built on closed source proprietary systems that users can't fully inspect. If they can't inspect, they can't verify. If they can't verify, why should users take manufacturers' claims on trust? I suspect the reason so many hardware wallets remain black boxes is because they have something to hide, like the decades old smart card technology used by so many of the wallets to which Bitcoiners entrust their keys. This tech isn't fit for today's crypto use cases and certainly is not for a future of decentralized security where we'll need keys to safeguard everything from our digital identities to access credentials. Hardware wallets' continued reliance on closed proprietary systems is not just a security nightmare, it's also terrible for Bitcoin innovation and adoption. Today's wallets are effectively walled gardens where developers must follow restrictive rules and can't offer any degree of customization for users. This isn't just control freakery for its own sake. Often it's a function of the underlying technology. Devices like Ledger need to give every app access to the master seed. Obviously, that means they have to be painstakingly reviewed before they're approved, if they ever are. If that's how the App Store worked, we'd still be carrying Nokia 3310s around in our pockets. Instead, we got open ecosystems, a thriving developer community, competition, and a galaxy of brilliant apps. That's what I wish for wallets. When developers can build permissionlessly, they will not only deliver novel functionality and enhanced user experience, but will play an essential role in wallets' evolution to support and secure the ever-growing complexity of Bitcoin applications. Wallets should be a hub of innovation, a place for developers to build the killer apps that will compel people to adopt Bitcoin and blockchain-based services. In reality, an ecosystem like Ledger is the anti-app store, holding back decentralized innovation instead of driving it forward. The solution is both simple and essential: transparency. Just as strong encryption relies on publicly tested open source algorithms to ensure security, the devices that store cryptographic keys must follow the same philosophy. Open source Hardware and software enable security researchers, developers, and even individual users to audit and verify security measures, reducing reliance on manufacturers' claims and increasing overall trustworthiness. Newer, more secure alternatives already exist. Hardware wallets based on open source microkernel architectures provide a more robust security foundation, allowing independent verification of their safety. These systems ensure that no single company controls the security of users' cryptographic keys, reducing the risk of hidden vulnerabilities and fostering innovation. The good news is that only 1 in 40 crypto users currently owns a hardware wallet. Let's make sure we give the other 39 a truly secure way to self-custody their digital future and support the innovation that will attract billions more to adopt. Okay, and last we will cover an article from Crypto Potato from March 28th. This one is entitled Bitcoin's outflows are signaling big things despite recent profit taking. So we'll finish this episode with a little bit of, shall we say, hopium? Bitcoin briefly surpassed $88,000 earlier this week amidst a recovery following several catalysts, including GameStop's surprise $1.3 billion capital raise for Bitcoin allocation. Despite this surge, the crypto asset quickly retraced, falling by 3% over the past 24 hours as traders appear to have cashed in on the brief relief rally. However, Bitcoin flows across all exchanges suggest that a strong rally may come to fruition soon. CryptoQuant's latest analysis, focusing on the total Bitcoin inflow and outflow from exchanges, indicates a massive upside potential for the largest crypto asset. If the total flow is positive, it generally signals a bearish trend due to the increased selling pressure. On the other hand, negative flow suggests a bullish outlook as more Bitcoin is withdrawn from exchanges, which implies investor confidence and expectations of a price increase. The analysis shows that since February 6th of this year, there's been a significant increase in Bitcoin withdrawals across exchanges. Historically, such outflows have been associated with rising asset prices, which in turn signal that investors are accumulating and transferring their holdings to cold wallets in anticipation of future gains. This trend indicates a growing sense of market confidence, which could mean that a price rally may be on the horizon. Additionally, the analysis highlights the relationship between Bitcoin inflows, outflows, and net flow. Higher inflows indicate increased selling pressure, while higher outflows reflect investor confidence and are typically bullish for the price. With recent data showing large negative net flow, there is speculation that the asset's price could experience upward volatility in the near future if these trends continue. The market may see a major shift in favor of buyers, thereby resulting in a potential rally. On the institutional side of things, spot Bitcoin exchange traded funds in the US extended their positive flow streak to 10 consecutive days on Thursday. This represented the longest inflow run since December. According to Soso Value data, these investment vehicles saw a total daily net inflow of 89 million on that day. Fidelity's FBTC dominated the figures, contributing 97.14 million, while BlackRock's IBIT also saw nearly 4 million in inflows. However, Invesco's BTCO experienced an outflow of nearly 7 million, and WisdomTree's BTCW saw 5 million exit the fund. All right. Wanted to highlight this week's featured post on the Bitcoin Fortress Substack. The article is entitled Borrowing Against Bitcoin, CeFi Platforms in North America, a Bitcoin Fortress deep dive. So check that out. I will include a link in the show notes. And a quick look ahead at upcoming articles, starting with Monday, Riding the Power Curve. That will be followed by Thomas Sowell, A Timeless Thinker for a Bitcoin Age. And then Holding Your Own. It's an article about self-custody. A kind of fun and weird one. The Berenstain Bears discover a causal trade with hyperstitional AI entities from the future timelines. That's a total rabbit hole. Bitcoin for the win, and then Hal Finney, Bitcoin's quiet hero. So check that out and subscribe and all that good stuff. And with that, I will thank you for listening to the podcast. If you enjoyed the show, please like and leave a comment. Also, don't forget to subscribe on your favorite podcast app so you don't miss an episode. You can follow my Substack. It's at bitcoinfortress.substack.com. And you can follow me on Nostr. My NPub is in the show notes. Nostr is Freedom Tech. Freedom Tech is good. And with that, I will talk to y'all next week. Bye bye.